Listen to me carefully. I am shorting the failure of green from above. Okay, that can be like this, the failure of green from above. I am shorting the failure of green from below. I am diving into red from above. Stop. I am diving into red from below. I am only going long from narrow states and bars that are being birthed from a flat 200 in a powerful way off that 200. This is your roadmap for the foreseeable future. You should draw little pictures on a piece of paper, all 4 scenarios. There's only 4. 1, 2, 3, 4. Well, there's 6. 1, 2, 3, 4, 5, 6. There's 6 scenarios, 2 long, 4 short. You should draw pictures. And each time you're ready to take a trade, you double check, is this one of my 6 pictures? If it's short, is this one of the 4? Long, is this one of the 2? What you're looking at is a 2-minute chart of Alibaba. Now, today turned out to be one of those really abnormally strong days despite multiple gap ups across the board, but I still managed to make a decent gain in BABA on the short side. Remember, I explained to you that there are different types of green that I'm going to doubt. If a stock gaps down below everything, that means the stock, the 20, and the 200. If a stock gaps down and rallies up, I'm going to doubt that green, and I'm going to look for a failure, boom, of that green back to the downside. So I'm going to doubt the green under everything. I am also going to doubt the green decently above everything. So let's say a stock gaps up, moves up, and I am going to doubt that green and look for a boom, a canceling out of the green above everything too. Now, what do I mean by everything? The stock's late day price data from the day before, the 20, and the 200. That's what I mean by everything. So you can gap down below and produce green, which I'm going to doubt. You can gap up decently above everything and produce green, and I'm going to doubt that too. This is what I mean by doubting green. If the day is strong enough, what green will I actually buy? That's been a popular question here. So many traders have reached out to me and said, Oliver, listen, I know you doubt the green. I know you're going short 9.9 times out of every 10. But what is that 0.01% of the time that you go long? Like, they want to know what's the needle in the haystack. Well, I'm going to explain to you what the needle in the haystack is. You've got a narrow state between your stock, your 20, and your 200. That's what I mean by everything. So everything is tight. And from this tight state, you get boom, you get power being born from the tight state. The tight state is birthing something explosive, a power bar being born from a very tight, narrow state. So this morning, Alibaba gaps way up here, excessive gap to the upside. I mean, it doesn't produce green. So it's not a gap and run, which I would wait for, boom, the canceling out of that green to play that canceling out move, right? It didn't produce that. Instead, it gapped and immediately started producing red. Now, I want you to look at where it gapped to. It gapped to close to around $99. That's a round number. I was telling my traders that between 99 and 100 should be massive resistance. 100 in particular is a major resistance number. It's major support if the stock is above 100, but when it's under 100, you'll very rarely see a stock sear right through 100. It might peekaboo, but a lot of times it has trouble near 100. I was willing to short the green in between 99 and 100, but we didn't get any green between 99 and 100. We're only getting that now. But I was willing to short the green, but instead of getting green first on the gap, We immediately got red, and I immediately shorted the stock. And I have to admit that I shorted early. I shorted in the bar early. We were producing immediate red off of a round number $99. Boom, short. I was willing, guys, to stop out above 100. So that was my maximum loss per trade area. Regroup up there. But boom, the stock gave me this. This doesn't look big, but this is a $2 move, guys. It's a $2 move from the gap, from the opening price, more or less. Shorted 4,000 shares and grabbed about 2,300, if I recall, or something like that, on the quick drop on 4,000 shares. Remember when I told you, when you have something wide in space, you need to know two numbers, really three numbers, but two numbers in particular. You need to know the halfway mark. So from the gap, where's halfway? More or less there. It's a zone. And you also need to know about the 33% mark. It's good to know kind of like the 3/3 mark too. And so a lot of times you get reactions. If we break through, you're going to get a reaction off that one. And if we break through, you get a reaction off of that one. All right. So I want you to immediately always think third, half, 2/3. All right. Half, they're always zones. Third, they're always zones. 2/3, they're always zones. Nothing is ever a specific price. And so we can see that Baba found support on the third. Now, here's the thing. If a stock finds support on the third and it maintains that support, you're likely to go to new highs. If you drop to the halfway mark, you're likely to go up as much as maybe 2/3, sometimes all the way. But if you drop here, you're lucky if you get past 1/2. Now, this is not 100% of the time. Nothing is. I have to keep putting that out there as the caveat. But this is what happens the vast majority of the time off of these support levels. I will play red from way above everything. So if a big gap does not give me green first, I'm going to short the red. All right. You don't have to do a stop that far away. You can short the red and put a stop right above the red that you're shorting. Keep it tight. I'm going to short the green from way up here when the green gets eliminated from way up there. Or if it doesn't give me green, I'm going to short into the red from way up there. Like here, boom, I would go long there. If I have two other shorts to take, then I'm going to probably pass on this. What I'm saying is if I can't find a valid short, I'm taking that long. Now, there was something that kind of produced this today. One of my traders took it today. It was Tesla. Now, you see, it was Tesla coming out of this kind of tightness. It's not the ideal tightness I like. There are two types of narrow states, right? There's the narrow state where everything is flat, guys. All three items are flat. The stock is flat, the 20 is flat, and the 200 is flat. That's the most ideal flatness. Here in Tesla, you have the stock relatively flat, the 20 relatively flat, but the 200 not flat. It's not quite as ideal as the Baba, where almost everything is flat. So that's important to note as well. But anything that's surging out of a narrow state, I can give a shot at. All right. Now remember, erase the tails to give you greater clarity. If the tail is not what you're playing, it's not important. You're jumping in on this bar because it's being born from a narrow state. The red bar is very interesting because it had zero follow through and got immediately taken out. That's very bullish. And it's from a narrow state. But even without this, let me erase this and show you guys. Erase this. Let's take this red out of the way. Let's even take the green out of the way next to it. Now, let me show you something. You see what I'm talking about? Look at the origin of the bull bar. It's being born. This is its birth print. right from the narrow state and right from the 200. You don't need anything else. You just dive into that bar when it's clear that this is power. All right. Now we have the red bar as a reference so we can pick a very precise entry point because we have a reference. But if you did not have a reference, you're just going to dive into that bar because it's being born from the 200, which is also a narrow state. And at the point where it's just clear that this is pure unadulterated power, boom, you just hit the buy button. Now, here is another one. You see this big bar here? Boom. Where is it being born? It's being born from the 200. Now, where do you buy it? Well, you can dive into the bar once it's clear that it's just pure power, but we have a reference point, the red bar before it. So your entry can be very precise. And the flatter that 200 period moving average, the more powerful it is. Listen to me carefully. I'm shorting the failure of green from above. Okay, that can be like this, the failure of green from above. I am shorting the failure of green from below. I am diving into red from above. Stop. I am diving into red from below. I am only going long from narrow states and bars that are being birthed from a flat 200 in a powerful way off that 200. This is your roadmap for the foreseeable future. You should draw little pictures on a piece of paper, all 4 scenarios. There's only 4. 1, 2, 3, 4. Well, there's 6. 1, 2, 3, 4, 5, 6. There's 6 scenarios, 2 long, 4 short. You should draw pictures. And each time you're ready to take a trade, you double check, is this one of my 6 pictures? If it's short, is this one of the 4? Long, is this one of the 2?